So I don't see any reason why it shouldn't run back up to... All right, welcome to Talkin' Investing. I am Tom. This is not financial advice. We are here to talk about all things investing. And today I want to talk to you about a company named Bitfarms, ticker BITF. This is a Bitcoin mining company. I want to go through their Q2 earnings real quickly, talk about the number of Bitcoin they're mining. Then I want to talk about an announcement they made with their Q2 earnings, and that is negatively impacting the stock in the short term. So I want to talk about that and look at that. I think it's a positive catalyst, but it's a little convoluted. So I want to go through and try and give you my thoughts on that. And then we'll just take a quick look at the chart and talk price. So let's take a look at the Q2 earnings. Okay, I'm just going to be brief about this because this is not the point of my video, but I think it's important to at least look at what they did in the second quarter. Q2 2021 highlights. Revenue of $36.7 million. That's their all-time record for a quarter, so that's good. The next line talks about gross mining profit of $28.1 million, which represents a 79% gross mining margin. So that's an extremely healthy gross profit margin, and it will be better in the third quarter based on the information they've already released. They talk about they mined 759 Bitcoin with an average cost of approximately $9,000 per Bitcoin. So they also received and installed 3,461 miners during the quarter, which represented 0.24 exahash per second of computing power. So they continue to increase their computing power, therefore giving them the ability to mine more Bitcoin. So that's the quick summary of what happened in the second quarter. Now I want to talk about the other news that came out simultaneously with this. Okay, so if I scroll down to the bottom of this same press release, you'll see at the market equity program, the company may at its discretion and from time to time during the term of the agreement sell through the agent such a number of common shares of the company as would result in aggregate gross proceeds to the company of up to $500 million. So the term of this is 25 months. So I just want to talk about this for a little bit because I think a lot of people pressed the panic button. They looked at potential $500 million worth of additional equity being issued. If you don't do the math on this, it can look pretty scary. But I actually think that this dilution is going to be at a very good rate. I am expecting this to represent a total of maybe between 15 to 25% dilution over the course of 25 months. And you will see, based on what their performance is going to be, that's actually phenomenal. So let me show you what I'm thinking. Okay, so this is their income statement from their Q2 earnings results. So I want to show you at the bottom, all these numbers are in thousands. So here's the 36 million in revenue that they talked about. If we go to the bottom, basic and diluted weighted average number of shares, you will see that at June 30th, 2021, they had 151,954,000 shares outstanding. What I want to show you is that right next to that number, you'll see that at June 30th, 2020, so just 12 months earlier, they had 84,655,000 shares outstanding. So over the course of 1 year, from June 30th, 2020 to June 30th, 2021, they issued an additional 80% of the shares that existed at that time. So that's 80% dilution. However, the stock price has gone way up, and I'm going to show you why. So let me go to a chart where they spell out exactly what they need to do, and you're going to see they don't really need $500 million, but this is very typical for public companies to do. You don't want to press your luck and then have to do a second at-the-market offering, so you authorize more than you'll probably need. Okay, this is from the prospectus that they sent to the SEC. So this is an official filing for an at-the-market offering of up to $500 million. This happens to be page 67 of 85. Business objective and milestones. So this is where they talk about why they need the money and what they're going to do with it. So bullet point number 1, complete the build out of an additional 78 megawatt of electrical infrastructure in Quebec during the first quarter of 2022 at an incremental estimated cost of approximately $10 million. Now, note 1 to that says the company anticipates being able to accomplish this milestone without additional financing. So the first $10 million that they need to spend, they already have. They're not going to issue any shares of stock in order to accomplish this. They already have the money set aside to do it. Bullet point number 2, acquire mining equipment to achieve 3.0 exahash of computing power during the first quarter of 2022 at an estimated incremental cost of approximately $45 million. And then you'll see that's note 2. Note 2 says the same thing. The company anticipates being able to accomplish this milestone without additional financing. That is crucial. The third bullet point is commence the engineering, procurement, and construction activity in the second half of 2021 with expected completion in 2022 of a major mining facility. So this will reduce their direct cost of sales dramatically. They will need to issue stock for this. So that's $45 million to $55 million. So there we go. They've got to raise $45 to $55 million to do that. The next bullet point, achieve the company's target of 8.0 exahash of computing power by the end of 2022 for an aggregate increase of computing power of approximately 5.0 exahash over the company's first quarter of 2022 target of 3.0 exahash. The company anticipates that it will incur additional mining equipment costs of $215 to $235 million. So they're going to need to raise money for that. So if we take the top end of both of those numbers, that is $290 million. That's the maximum amount of money they're going to need to draw down on this potential $500 million offering. And again, they get to do it from time to time at a time of their choosing. So in the event that their share price isn't where they want it to be, i.e. it's around, $5.50 right now, I do not believe they're going to do any at the market offerings at $5.50. I would estimate that they will start doing these at maybe $7.50. Remember, they have 25 months to do this, so they may end up averaging $10 a share. That's how I get to, if they need $290 million and they don't dip into any of their earnings or their reserve of Bitcoin that they have on their balance sheet, if they leave all that intact and just do at the market, that will result in somewhere between 15 to 25% dilution in your stock. So there's another chart that I want to show you that I think puts this all into perspective. Okay, this chart is from their investor presentation. So you'll see at the beginning of the year 2000, they had 0.78 exahash per second of computing power. So at the end of the first half of the year 2021, they had 1.45 exahash of computing power. Somewhere in the neighborhood, but not quite double the computing power over the course of 1 year. Now, we looked at the numbers. They had to dilute their stock 80% in order to roughly double their hash rate. Essentially, to get from the 1.45 exahash of computing power that they have right now to 8 exahash of computing power, it looks to me like they're going to need to raise around $290 million, and they're only going to have to dilute themselves 15 to 25% to do so. So last year, they increased their hash rate by 80%, and they had to dilute themselves 80% to do that. This year, they're going to get to increase by 500%, and only have to dilute themselves 25% to do that. So, okay, let's say I'm wrong, and it costs them twice as much money as I'm talking about. In that instance, they'll have to do a 50% dilution in order to increase revenue by over 500%. So that is still an incredible bargain. That means that this stock right now is trading, in my opinion, well under its fair value. Remember, I'm not a financial advisor. This is not financial advice. I am just going through the math. Okay, so this is Bitfarms' trading chart for basically the months of July and August. Now, they reported earnings right here. So you'll see that is the same time they reported this at the market $500 million offering. So this stock on that day went straight down. So that was a big hit. So to put it in perspective, that meant it was trading on August 16th at about $6.53, and on August 17th, 1 day later, at around $5.35. So that's a massive drop off. The downward pressure on this stock is strictly from this at-the-market offering of up to $500 million. And I understand because it sounds pretty shocking. There's some sticker shock when you hear that. But we just ran through the math, and I think this creates a giant opportunity for these guys. So in summary, I think that this at-the-market program is going to be a very good thing for them. It accomplishes their goals. It is much more important that they get to 8 exahash and make profit. And if the cost of that is a minor dilution, we did the math. It seems like a big win to me. This stock on August 13th, so just a few days before they announced earnings, was trading over $7. So I don't see any reason why it shouldn't run back up to $7. You know, the price of Bitcoin on a day-to-day basis makes a little bit of a difference. So there could be some starts and stops. But sometime sooner than later, in my opinion, and again, this is not financial advice, the way I'm trading this is I expect this to go back to $7 in the next 2 to 3 weeks. Then my year-end price target would be substantially higher than that. So I think there's a correction to be made. I think there was a massive overreaction to the announcement of this at-the-market offering that they're making. That's my version of doing the math. You guys can agree or disagree. Please do your own due diligence in deciding whether or not you want to invest in Bitfarms. And those are my thoughts on Bitfarms for now. So thank you very much for watching, and we will see you in the next video.